Hello and welcome to a training session with Integrity Capital on how to perform a tax analysis for a personal tax return. So the very first thing that you're going to focus on is on the 1040, what's called the Schedule 1040 of somebody's personal tax returns. You're going to just go from the very top all the way down, and you will pick which year. So let's just say it's 2016. You'll put 2016 here, 2015 here, and then 2014 here. If there's an interim period of 2017 and you can get somebody's W-2s, then certainly you can put that in there. So the very first thing you'll do is you'll look for the line item on the 1040, which is one of the first pages that says wages and salaries. You're going to log in that person's wages and salaries. This is somebody who's actually received W-2 income from their employer. Now it might be a employee that actually owns the company but is paying themselves as a W-2, but either which way it will show up on that category, and you will input that for the particular year in this section. Next in line is what is called taxable interest. So the only time that you're really going to put in taxable interest or tax exempt interest and even ordinary and qualified dividends is if these items are consistent things they'll be receiving year after year. If they tend to have some investments that are going to pay them year after year, which are taxable interest, that could be just a traditional bond. Tax exempt would be a municipal bond that that person is receiving, monthly, and it's consistent on a couple of year basis. Ordinary dividends are just from, stock investments that they received. Qualified dividends, those will just have different tax ramifications on the way that they're taxed. So you will only really input these four categories under the discretion of the consistency of how often they received, if it's an ongoing thing. As you go down here, again, if they had gone through a separation or divorce, this person might be receiving alimony on an annualized or monthly basis for their children. So again, look for this being a consistent number and confirm with them that that will be an ongoing thing, and then make sure to plug that in to the line item. Next on the line is business income / loss. Well, what is this? Basically, there might be a Schedule C that is a few pages down in their tax return, which shows the income and loss statement they have from a particular business. It might be their primary business, it might be a secondary business they have. But what you'll do is you will go to that page or to that particular section, and you will start by adding the net income. You will add back any interest. So you'll take net income, you'll add back interest, you'll add back any depreciation and any one-time expenses that they have, including there might be rent. So if they're going to be replacing their rent by buying a new building, you would add that back in as well. And as you hover over each one of these on the spreadsheet, you'll notice that there'll be particular instructions. So just a FYI as you're going through this. The next line is capital gain and capital loss. Well, what is that? Well, if they had sold a piece of real estate or sold an asset and they received either a gain on that from their original cost basis or a loss, then right here would be the place you put that income or loss. What I would caution you about this is chances are if there's a capital gain or loss, this is not ongoing revenue. Unless, again, that is part of their business, is buying and selling things. And then if it is, you will go ahead and input that information in there as well. Ira Distributions, that will go hand in glove with what we talked about up here. If they happen to be over the age of, I believe it's 62 and a half, they can start pulling out of their IRA. And at the appropriate age, again, if this is ongoing consistent income, you will put that in this item. Pensions and annuities, that's the same thing. If they have the ability to pull that out towards their retirement age, you will make sure they are, and that will be a consistent number that goes in here for their income. And finally, Schedule E items. So again, this will be K1 distributions from their LLCs or companies. Whatever their pro rata share of ownership is, they'll receive that in the form of a Schedule K1, which will manifest on their personal tax return. What you'll need to do is to go back to whatever entity or entities it is and follow the instructions that are given here as you hover over this item. Again, it'll be net income, adding back interest, adding back depreciation, adding back any one-time expenses, and or rent if that is a replaceable item. Again, it'll be critical that you input these appropriately in each year and do so as you collect the information accordingly so that we can really understand what is the global cash flow for this particular client. So again, this is Education by Integrity Capital. God bless.